Well, hello and welcome to the National Real Estate Post here on a wonderful Monday morning. Before we get started, obviously we have our good friend Barry Habib in the house. For good reason, we got some stuff to talk about. But I want to remind you guys about our Coop Out product. Listen, if you click this Coop Out banner over on your right, you're going to see how you can get local small businesses to send you warm referrals on a consistent basis. Super cool strategy I did when I was originating, and I built the product around it because I had a lot of demand for it. You're going to love it. Just click the banner, check it out. It's pre-recorded webinars. Watch it at your own convenience. And there's a code in there you can put in where you can get it for free for 30 days. It only costs $29 a month anyway. It's not like it's hurting you. But so be sure to check that out. So with that, let's move right along here. We've got Mr. Barry Habib on the phone.
Can I say something? Can I say something?
Yeah.
I listened to your talk on Coop Out.
Yeah.
So impressed. I think everybody should really check it out. I mean that sincerely. It just makes sense. It's built out so great.
Yeah.
I loved it. I absolutely loved it. I was very, very, very impressed.
Thank you. I appreciate that. That's nice of you to say. So we've got Barry on right now, and I just want to kind of backtrack a little bit. The last time you were here, I think it was June 6th. Wasn't it June 6th?
I think it was June 2nd.
June 2nd, somewhere early June, we had you on here, and you were telling everybody a couple things. It was kind of a neat show, and you were talking about some anti-aging stuff and stuff like that. But you had a specific. You were saying that you're expecting stocks to kind of move lower, and you've been expecting that. Which now here we are, and yes, they did. But there was one particular stock that you, I think it was a UVXY. Was it UVXY?
Yes, I did. I suggested that as a way to protect yourself because that is a multiplier of the volatility index or the VIX, and it's a good hedge. In case stocks move lower, that would do well. And sure enough, stocks did move lower. I happened to make that suggestion, and well, you know what happened.
That's right. So at the time, I think, what was it? It was trading at like 10.07, and like earlier today, it was trading at 17.12. So,
well, last week it actually at 17.12. It might have backed up, but it was actually a 70% gain in like 2 weeks.
Wow.
So those are good ones.
That's a pretty good thing. So it pays to hear what you got to say about that stuff. And then not only that, but you're saying the 10-year, you were seeing that go lower, rates go down. At the time it was at 184. Now we're at what? What is it? 152.
Well, my target was 154. It actually broke below my target. It hit 152 last week, so that was a good thing. We kind of thought they'd go lower. A lot of people thought they were going up, but we saw it differently, and we happen to be correct on that.
You called it. So great job once again, calling it, and as you always do. Good stuff. Let's talk about rates a little bit more. Another thing that you mentioned on our last show was that the Feds weren't going to lower rates. Between then and yesterday or the day before, a lot of media speculation was that they were going to bump rates, when in fact they did not. So you hit that one. Go ahead. I was going to say, what's up with that? What do you think that's going to do for us here?
Well, the media was going crazy. Steve Leisman on CNBC was horrible. He was just hyping for weeks that the Fed was going to hike rates, and it kind of puts a little doubt in your mind. And all these surveys, it got up to like a 60% chance that the Fed was going to hike rates. A lot of experts thought so. As you know, we talked about it in the show. We just didn't see it. We did not see it at all. And sure enough, we did not get a Fed rate hike. But what was very interesting about this, Frank, is that one of the Fed members, Esther George, she is a huge hawk. She has been dissenting against Janet Yellen, wanting a Fed rate hike. She didn't even dissent this time.
Wow.
So when the most hawkish Fed members are afraid to hike rates, this tells you that it's going to be tough for the Fed to hike rates for a very long time. Now, that's not necessarily great news for mortgage rates. It's good news, not great news. It's actually a little bit better news for the stock market than it is the bond market, but it does speak to the fragile nature of the U.S. economy. And I really think, as we mentioned, there's a recession in the wind, and there's probably a bear market in stocks in the wind, because I don't think this economy is very strong. And we see the job creations that we had, not very inspiring.
You think they'll go negative?
I don't know if the Fed has it in its mandate to go negative. Hey, but look at the German Bund just went negative. Who would have thought Germany would have negative rates?
Yeah.
This is troubling, and it does say that we have room to see interest rates here in the U.S. go lower. In fact, as you know, I thought that we'd go lower. We thought once we hit this 154 that the next stop would be 138, 139. I think we're going to see that. And in fact, I wouldn't be surprised if we move lower. So start thinking about this. Start thinking about what your business is going to look like if rates drop further still. I mean, refinances are phenomenal right now, but you're going to get a whole nother level of refis.
Wow.
And maybe think about, less closing costs, thinking about adjustables, thinking about, maybe go no closing costs and bumping up the rate a little bit, because I think there will be opportunities to refinance these people to lower rates down the road, and I think it's going to separate you from your competition.
That's something else, man. You brought up Germany, and putting our focus maybe here now a little bit on Europe, and we've got Britain saying they're going to bail from the Union. What's up with that? What would that do to us?
So the European Union is not a fiscal union. It's just a monetary union. And Britain's also always had one toe in the water. They've kept their own currency. And not having your own currency really strips you of being able to kind of devalue it and increase your exports. So that's why countries like Greece were thinking about it. Spain is having a difficult time. There's a referendum coming in the Netherlands. So you're going to be hearing about this thing in the next few months called a Nexit, where they will be thinking about leaving. Here's the critical nature of this vote on June 23rd. If Britain indeed decides to leave the European Union, it will open the floodgates. Other nations will have the okay to go, and then you will see this whole thing potentially unravel. The market hates uncertainty. Stocks will not like that. Money will fly into bonds, and that could spark interest rates to drop rather significantly. I'm not saying it happens overnight, but that's where you could see the 10-year Treasury start to approach a 1% level. So, this is important stuff, because what's happening in Europe is that these countries that are more fiscally responsible, they don't like what's going on. They don't like this negative interest rate environment. They don't like the debt picture that's happening there. They want to also have the independence. Even those that are less responsible want to have the independence to devalue their own currency and print their own currency and try and stimulate their economy via exports. So it's not a good thing. And even what's happening in Asia is very interesting. Japan, they're like a deer in the headlights. I mean, my good friend John Malden calls them a bug in search of a windshield. So the Japanese economy, we know it's struggling, but how about this? They went very negative with interest rates, and they thought that would do good. But the last time that they did this, not only did their currency do the opposite, their currency actually increased instead of decreased in value, and their stock market tanked. This is with more stimulus. So this time they said, hey, you know what? They were petrified. They didn't do a thing. And stock market obviously didn't like that either. So you wonder if the people at the Fed are paying attention. I mean, you wonder who's home there,
Right.
Think about this, Frank. Not one member of the Fed has ever so much as had a lemonade stand or a newspaper out. We had Richard Fisher from Dallas. The guy was the only businessman. These people are all academics. They should make it mandatory. If you got a PhD, you can't be part of this, or you should have some business experience.
Yeah.
These folks at the Fed truly are really confused. They showed after the last Fed meeting these dots, which is like the Fed members forecasting. Now, they've been atrocious. These people would be fired on any job for their forecast. They're so bad, okay?
Yeah.
Little joker on the Fed, now it's left anonymous, he thinks we're going to have 5 rate hikes in 2016. There's 6 months left. He's this plot. What is he thinking? What is he drinking? Smoking? Doing? Well, I don't know. How do you think there's going to be 5 more? And another one thought there's going to be 4 more.
Wow.
It is almost comical how out of touch they are. You wonder if they're just mailing this in. I mean, these people are the most important folks for our monetary policy.
Yeah. Wow. Well, a lot to think about, a lot to chew on. June 23rd is the date that the vote
Frank,
goes down.
I want to say one thing. We really have to start focusing away from monetary policy. It's really got to be leadership and fiscal policy. We got a presidential election. I'm not going to get political here, but it's got to be. We got to stop this anti-business sentiment. I mean, it can't be a crime to want to be successful in business anymore.
It's
We got to
ridiculous.
get behind it.
Yeah.
It all speaks to something called the velocity of money, and the velocity of money has to happen when someone borrows money and puts it to use where they not only can service the debt but pour more money into the economy. We need more entrepreneurs that can create jobs and create businesses. And because of, I don't have to speak to anybody listening to this who's in the mortgage business. We know what regulation and overregulation looks like, right?
Right.
But we have to make some thought process changes,
Yeah. Good stuff, Barry. Thanks for sharing everything today. And let's remind everybody, don't forget, you can get MBS Highway for, is it 2 weeks? Is that what it is? I always forget. 2 weeks for free?
You know what? It's very inexpensive. We
It's
have
really,
on there. I mean, we do coach you every day with a video, and we help you out. I think if you take a look at some of our co-branded tools that are on there, and a pre-qual marketing kit, which really helps you make sales pitches to realtors. There's so much that's on there.
You guys got to check it out. 14 days for free. The link's down below. Check it out. Barry, thanks for showing up. Always appreciate it. You guys have a great day. Forward, share, and subscribe for free. We'll catch y'all later here at the National Real Estate Post. See you, Barry.
Bye.